Hello everyone, I'm Ken Kurtzel. Welcome to News and Brews, our weekly to the point video series where we discuss new developments related to the coronavirus pandemic and other emerging issues in college athletics. As always, I'm here with my partner, Katie Davis, the leader of our Collegiate Athletic Services industry practice. And today we've brought part of our band back together. Joining us are two of our teammates, Brendan McKittrick and Shane Metzler. We're shifting gears today to talk about something not COVID-19 pandemic related. As we approach the end of June, many athletic departments are working on closing out their financial year, and this is the time of year we start hearing questions from our clients about which NCAA categories to record various revenues and expenses. The NCAA has their own unique membership manual reporting system where member institutions submit financial data detailing operating revenues and expenses related to their intercollegiate athletics programs to the NCAA on an annual basis. This data is populated so that institutions can not only view their data, but theoretically also compare and benchmark with other schools. However, we find that there are many unanswered questions in NCAA guidance out there and many unique factors that don't truly make this reporting apples to apples. Each year, we reach out to the NCAA on behalf of schools to help gain clarity around their unique circumstances. And the work we've done here has inspired us to create a special segment of News and Brews that we call, Which Line Is It Anyway? We have an extensive list of category questions we have researched over the years. We'll do a round robin with our athletics trio of Katie, Brendan, and Shane to share their top FAQs this week. We plan to continue featuring this segment periodically to best inform you on unclear financial reporting requirements. Katie, kick us off.
Thanks, Ken. So we're just gonna share a few today, and we'll come back to you with more. But we felt that these were relevant, as that we hear the questions a lot, and they could be helpful, especially for some of the unique items that are happening for you this year. So the first one for us was guarantees on canceled games, and how do you report that? And the NCAA actually issued clarity in their 2020 agreed upon procedures document around this, where you would report amounts received in line 7 for guarantees, or amounts paid in line 21 for guarantees. Even if they're paid for canceled games, it would still be picked up as guarantees.
Yeah, just want to say thanks, Katie and Ken, for inviting us on here. Really excited to be here and talk about NCAA agreed upon procedures. The one I want to kind of speak to is internal loans for operations. We actually had a client this year, kind of in a unique circumstance. They got a loan to help fund operations. And generally with loans, kind of on a simple accounting transaction, you would think, debit, cash, credit, debt. However, when we were talking to them, they kind of expressed, hey, that's not really the intent of these funds. They're really to, again, fund their operations. So we actually went to the NCAA and kind of explained their situation, and the NCAA agreed with them, saying, hey, since it is for operations, we recommend that you include it in lines category 4, direct institutional support, and if those funds were required to be paid back, also included in category 52, which is athletics related debt.
Another kind of major one that we wanted to bring up is conference distributions and the 4 different categories that they can be reported in. So conferences distribute funds for a variety of reasons, and there's kind of 4 categories that the NCAA has that you can report those funds into. So the first one is just general conference distributions, and that would include just general conference revenues, surpluses, and shared revenue from the conference. Then there's also conference distributions of bowl generated revenue. So that would include any revenue coming directly from bowl games that the conference participates in, as well as college football playoff. That category is exclusively for football. The third category is media rights. So that would include funds from conference networks like the SEC network or Big Ten network, or just general cable or network deals with ESPN or CBS. The last category that conferences can distribute funds for is NCAA pass-through revenues, and so those would go into the NCAA distributions line.
Yeah, so the next one I'm going to cover is excise tax. So many of you are familiar with the new rules from the IRS that say that executive compensation over $1 million could be subject to 21% excise tax. Of course, there's a lot of gray area around that right now. Some institutions are recognizing that they do need to pay that. Others are finding loopholes in the regulations that state that they may not have to pay that. If your institution did pay that, there is different treatment based on how that was handled. So the NCAA put out an FAQ number 11 about this. One of the scenarios could be that your institution pays it directly and doesn't charge athletics for that. And in that case, that goes into categories 6 and 36 as indirect institutional support. The next scenario is that your institution pays it and charges athletics for it. And in that case, it would go into categories 4 and 35 as your direct. The third option is that it's paid directly by athletics. And in that case, it would just be expensed in category 35 as direct overhead and admin.
Yeah, so the other one kind of interesting this year was contract buyouts for coaches, which actually not a lot going on right now, but recently we've had a lot of activity there. So there's kind of two sides to that. One is the schools buying out the coach, and then the other side's the coach getting bought out. So I'll kind of talk about kind of the easier side. So when the school's actually buying out a coach, so they're actually paying out money, really the NCAA recommends that that be included in category 40 of other operating expenditures. On the flip side, it's a little more convoluted. In the FAQ, they actually have some guidance in there essentially saying, hey, any of those revenues received if your coach is being bought out should be net against salary expenditures. Now, we actually had a school go through that, and they argue two things. One, well, it's going to really distort the picture of what's going on during the year. It's going to decrease our salary expenses, and if we're trying to compare against peers, it's really not going to make much sense. And two, it's really the purpose of those monies are to fund operations. They're not really to pay for the new coach's salary expenses. So we went back to the NCAA, kind of explained the situation, and they agreed. So actually, in that specific scenario, there was some money spent to move the new coaches to the school. So they used that portion to offset those expenditures, and then the remaining was actually picked up in other operating revenue in category 18. And I think there's kind of two big takeaways there. One is, what's the intent of the money, similar to the internal loan for operations? So what are they planning on spending that money for? And then two, what's the intent of the NCAA report? We all know it's not perfect and there's some flaws in there, but really what they're trying to do is have some comparison amongst other schools. So knowing those two, that's where it really kind of comes back to, yeah, for our situation, we wanted to, again, offset part of the moving expenditures, and then the remaining money was going to be recorded in category 18.
Another tricky situation that we've come across is when schools have sponsorship agreements that include the ability to purchase sports equipment or uniforms or supplies at a large discount. So we asked the NCAA how that should be accounted for, and essentially what they said is that the expense for those that equipment or uniforms should be recorded at the actual retail price, and then the difference between the retail price and what was actually paid for, that discount amount would be recorded in sponsorships, licensing, and royalties.
All right, thank you, team. Now it's time to pivot to the all-important Brews portion of our broadcast. We've been supporting our local Gainesville breweries lately during this pandemic with purchases to help keep them going, and it's been a long tradition in Gainesville that the different breweries get together and collaborate on a beer that they produce each year called It Takes a Village, to come off of the Ville part of Gainesville. And this year that was obviously not possible for them to quite collaborate in the same way that they have in years past. So what they've done instead was they came up with basically a basic recipe that all of the breweries did individually, and put a little twist on that recipe, each one unique to their own breweries. So we have got 3 of those samples from Gainesville, from Blackadder Brewing, from Swamphead Brewing, and from First Magnitude Brewing. And So we're going to really just kind of get, as Katie's shown there, there's the Swamp Head one, the first magnitude one, and then Blackadder, which does not can, does growlers. So theirs came into us in a growler. So each of us have all three of them. I'll kick us off. They're all New England style IPAs. So the popular style right now, I like all three. They're all three very good. I think the first magnitude one is probably my favorite of the three, maybe followed by the Blackadder one. But Brendan, what do you think?
I agree. I'd probably say number 2 to me, Swamp Head, but they're all three fantastic beers.
Yeah.
Katie, what do you think?
Yeah, I would pick first magnitude first, Blackadder second, and Swamp Head third. They're all good, and they were close, but the first mag one is by far the best one.
Yeah,
All right, Shane, what do you think?
I like the first mag one best as well. I think Blackadder was the second one for me, and then Swamp Head third.
All right, so thankfully all three good beers and good things to enjoy. Well, we want to thank you again for tuning into News and Brews this week. You can watch us each Thursday at 4:30 p.m. Eastern for a new episode, and you can contact us through our website or email directly if you have any questions. If you want to suggest topics that you'd like to see discussed here, beer recommendations, or if you want to tell us if you'd like to join us for an upcoming episode, we'd be happy to hear from you. And in the meantime, you can follow us on Twitter for more news in the higher ed athletics landscape, which is rapidly changing and evolving. Thank you for tuning in. Cheers.
Cheers.